times about austerity is the only solution. They seem absolutely committed to the course they're on, which is to make Greece and Spain and Portugal and the other countries pay. And they don't want to come up with any dough. And German public opinion is becoming even more kind of nationalistic about all of this. So where does this all go? The rest of the globe is saying, hold on, what's going on in Europe is going to unravel, at least this phase of global capitalism as we know it. But the Germans seem to say, well, no, this is what we want.
There's two things going on here. One is that despite this financial crisis being caused by the bankers, their orthodoxy with regard to government debt is riding the world. They have not lost their political influence. And bankers always look upon state expenditures from the point of view of will this cause inflation. And for a banker's point of view, if they lend you $1 and you pay them back in a devalued dollar, now with 90 cents, they lose money. It's that simple. So they're always looking at inflation. Now the Germans in particular,
I tend to disagree with what that man just said. I say that the bankers can make money no matter how much the currency is devalued. If you understand how fractional reserve banking works, okay, here we go. This is a lesson on fractional reserve banking, and I'm going to show that using fractional reserve banking, it is impossible for a bank to lose money unless two things happen. Two things must happen for a bank to become insolvent. They must either, one, stop lending, creating money, or two, they lose the ability to receive loans. As long as somebody is willing to give them money through fractional reserve banking, a bank cannot ever lose money. And here we go. Let's just say you've been out working hard all week and you've got paid. And here's your pay. It's one whatever. We're just talking about fractional reserve banking, so it doesn't matter if we're talking about a sovereign nation or a commercial bank or a consumer bank. If we're talking about a commercial loan for international trade, if we're talking about you paying your Visa bill, if we are talking about you buying your groceries. These money principles are universal and work throughout the system like this. Okay, you have your paycheck and you give it to your bank as a deposit. Okay, let's just say that this is they actually give you cash money, okay? And you bring it to your bank and you deposit it. Well, at the end of the day, they are able to take that deposit and they are able to count that deposit as an asset, and they are able to lend on it 9 times. So, during that day, let's say, they made 9 loans. They took your single unit, and now they have your single unit and 9 additional units because they've created this money by lending it, by creating loans. Money coming in, they create loans, they now have 10 units. They have a debit, a obligation of 1 to this depositor, and then they count this as a asset because they are the recipient of payments, right? They are getting paid 9 times because they hold your money, okay? So, let's say that they just do this once this month. They bring in your freaking salary, they loan it out 9 times. Next month comes. or you have, let's say somebody comes in, Joe comes in from last week. Joe comes over and he says, I want I need my money. So Joe gets your money because you just deposited it, and but you come back the next day and you want your money back. Joe over here's got the money. He went over here to another bank, and they did the same thing over here, multiplied it 9 times. Anyway, you come back to the bank the next day and you need money. You need cash. You want that cash back. Well, because your bank gave Joe the money, they no longer have your deposit. But hey, they have 9 little entries on their book that says they created money. Now that they have this money, which they actually do because they receive payments on this, so that is real. They are getting a cash flow from these loans. So the bank does not have to have this money, because they can go to their friend, the Fed, and say, hey, Fed, we got these 9 units over here. Hey, could you give us 3 units on that? Fed says, hey, no problem. 10% reserves. We're not going to give you frickin', we're not going to give you 3 units. We're going to give you 90 units. We're going to give you 90 units in cash. Because you got 9 units, we're going to give you 90 units in credit on your account at the Federal Reserve. And, oh, you need some cash to give to this guy? Oh, no problem. So, you know, no problem. No problem. So now, now you've been cashed out. You no longer, you deposited your money into the system. It created these loans. You stepped out of the system. But guess what? The bank still has all these assets. They're collecting payments on this long after you withdraw your deposit, because this is real. This is created on their books. This is real. Okay? Now let's say that these people default. Now, the bank has collected, let's just say it's the very next month, you know? It's not, but we know that we're talking about years. So let's say the banks for years have been collecting payments every month. And let's say 8 of these loans are bad. Oh, these loans are bad. They're no longer collecting new deposits every month to make the Fed happy, so they have this big pile of money that they can give to everybody. And actually it's the Fed over here that creates those rules and determines what is an asset and what is not. So that the Fed and the banks are able to just create money whenever they like, just by doing book entries, is why our economy is all screwed up. When you have something and you get something back for it and it's balanced, equal equation, you can never have booms and busts like you have with a fiat currency. I give you something of value, I get something back of value. But in a system where we have bankers that control our means of exchange through a depreciating system, and they do it through inflation, it's just utterly bullshit. You know, they make lots of money, they control it. Don't think for a moment that the banks are going to do something to avert inflation because it's in their best interest. No, It is in their interest to inflate the money supply. It doesn't matter how much it defaults, doesn't matter how much it devalues, doesn't just matters what kind of book entries they got. Because none of this really matters. It's not, we're not talking physical things, we're just talking about ink on paper or electrons in a computer, you know? And that's the system that holds the power, not something physical like this penny. Because it's made of zinc, it has intrinsic value. But the penny that's on my freaking bank account, it has no intrinsic value really, other than, you know, I can transfer it, you know. So we got to develop systems where we can transfer our value, our wealth, without the banks having the ability to create a monopoly and create something that's unnatural. I mean, that's why we have the problems that we have today. Thank you.